All right. Hey, guys. So as of today, the crypto markets have crashed by over 70%, with scammy projects down over 90 or 95%, or even more than that. And so the question on everybody's mind is, what the hell happened and what's going to happen next? So what I'm going to talk about in this video is what happened, why it happened, and some of the possibilities that I think are going to come over the next several months and years. Now, if you're new here, just a little introduction. My name's Chris Dunn. I'm a Bitcoin OG. I was one of the first guys in the world doing YouTube videos about Bitcoin and cryptocurrency. And in the sea of bullshit that has become the crypto YouTube sphere, I'm here to try to give you the realities of how financial markets work and help you not lose your ass in this space, because a lot of people do. And I've become just really frustrated with the space over the past few years. And this is really the only reason I do these videos anymore, is to try to help you guys survive and then thrive in the markets. So with that said, let's go ahead and jump right in. Why did the crypto markets crash? Well, it all goes back to the basics. The number one reason is supply outpaced demand. Basically, more people started selling than buying. Duh, right? Super simple. But what happens when selling increases is scams and high-risk projects start imploding, which feeds the fear fire. And everybody starts rushing for the damn exit at the same time. And also, the stock market sell-off also caused crypto to follow. And there has been a very direct correlation with the price of Bitcoin and other major cryptocurrencies and the NASDAQ, right? I've been laser focused on this 30% or more pullback in the NASDAQ because Bitcoin has followed very, very close behind. And so in this video, I'm going to get in the charts. I'm going to tell you what I think Bitcoin is going to do and what I think crypto could do in the future. But before we do that, I need to preface this by showing you guys some of the realities about financial markets, and specifically the realities of the crypto markets. The reality of how this stuff works, right? Financial markets. Anytime you look at a chart, this is a financial market, right? You have different exchanges like Coinbase and Binance, and it can be segregated at times, right? You have US exchanges, you have European, you have Asian exchanges, but these are markets, right? These are financial markets, which are a competitive arena where the majority of amateur traders and investors lose their money to a small group of professionals, right? And in the crypto markets, this wealth transfer is magnified even more than the stock market, right? Because you have so much dumb money. What is dumb money? It's emotional money. It's people trying to get rich quick. It's mom and pop chasing, CNBC news events, right? You have the majority of people that over time lose their money to a small group of people. I want to help you join that small group of people. Okay. So amateurs try to predict what the markets are going to do, right? A lot of times people are, Chris, what's your Bitcoin price prediction for the end of the year, right? That's what amateurs and rookies do. They try to predict what the markets are going to do. Professionals think differently. We try to create plans for all possible outcomes because we know the future is uncertain. We can have high conviction that something's going to happen, but if you put all your eggs in that basket, if that thing doesn't play out, you're dead in the water, right? So you want to think like a professional poker player or a professional chess player, and professional traders are right in line with that line of skill set. Now, let's also talk about prior crypto bubbles and what happened, why they happened, and what could possibly happen in the future. In the past, we've had 3 crypto bubbles. The first bubble was around 2014, and this was much, much smaller than what we've seen today. But this is where we had early altcoin ideas, right? This was when Bitcoin was just picking up steam. It had had a couple of bubbles, but crypto is different than Bitcoin, right? It's all the other shit. Most of it is bullshit outside of Bitcoin. So we had what was called colored coins, and, Ripple and Ethereum and stuff like that was starting to evolve around this early time period. And then in 2017, things really went crazy. We had the ICO bubble, right? The initial coin offering. You had a bunch of people that were creating websites and writing up white papers and saying they were going to solve the world through the decentralized Facebook, Wikipedia, Uber combination, right? 99% of it was bullshit vaporware that never materialized, and a ton of people lost their money, and regulators stepped in and started hammering down a bunch of scams, right? That was 2017. Fast forward to most recent bubble in 2021, we had the NFT and the DeFi implosion, right? And what has happened is, if you look at the total 3 chart, so this is the total market cap of crypto, excluding Bitcoin and Ethereum, you can see that we have now dipped below, for the first time, the prior all-time high from the 2017 bubble. So, the bubble here really started in the early part of 2021, took off and took the crypto market cap, again, outside of Bitcoin and Ethereum, from about 100 billion up to over $1 trillion. And now prices have pulled back over 70% and are now challenging that prior all-time high from 2017. All right. So again, this last one was driven by NFTs, JPEGs, digital beanie babies, and DeFi, right? Which DeFi means different things to different people, but it was a way that people were looking for high yield, right? High returns on their investments, ways to automate cash flow, experimenting. A lot of this stuff was super high risk and still is super high risk. Some of it has been successful, but a lot of it has imploded. Most recently, in my prior videos, we talked about Luna and UST and some of the other scams that have imploded. Here's where we are now, okay? Looking at these prior things, we know what the prior market cycles were. We know that prices are down quite a bit. Okay, what is going to happen next, right? What's going to happen from here? This is the big question. And this is going to be driven by, what is the next narrative going to be, if any? And I want to show you quickly just a couple of tweets. The first one is to help you understand market cycles from the mindset of a noob, right? This is how shit typically goes down. Step number 1, a newbie buys Bitcoin and alts and believes the prices can't crash again narrative, right? Every market cycle, we see this narrative. Institutions aren't going to let, prices crash, or, oh my God, we have mass adoption, but there's no way Bitcoin could sell off again. Every market cycle, we've seen this. I've seen it every freaking year from 2013. Then step 2 is the noob doesn't take any profit during the bull market because of this narrative. Inevitably, prices crash and Mr. or Mrs. Noob panic sells the low, right? Prices fall predictably by 70, 80, 90%, and they're the ones selling the low. They don't buy dips, right? They sell the low and they leave with their tail between their legs, and they blame others for their losses. They quit crypto. They call it all a scam, rinse and freaking repeat, right? This is just the way that things happen. And again, I've said this probably 500 times in my prior videos that everybody knows inherently to buy low, sell high, but 90-something% of people can't get themselves to do it the right way. That's why I do these videos. I'm trying to help you guys learn the right way to do this. Okay. The next thing that we want to talk about is the narrative, right? Like, where could things go? And when was this? A couple of weeks ago, I tweeted and I said, do you guys think we'll see another altcoin bubble? If so, what is the hype that drives it? And I got a bunch of really good comments. A lot of them talking about gaming, the metaverse, NFTs, right? Web3. A lot of these words that people are using are kind of like fluff marketing words. Like there may be some validity to things in Web3. Obviously gaming is a huge economy. And if you find a reason for a token to work, yes, it could be a huge idea. But keep in mind that most altcoins, most crypto projects are going to die over time. And bubbles are actually not good for many, many reasons. Number one, just like we talked about, a lot of people that come in and they buy the highs and sell the lows. they leave and they never come back, right? And it puts a bad taste in their mouth. Also, all of these scams that pop up or failed projects put pressure on regulators to overstep, to overregulate, right? They almost compete. The different three-letter agencies, they compete for power, right? They compete for who's going to regulate. How do we smack these scams down, right? So these bubbles, in a way, yes, they're good for traders. It's a way to come in and really build wealth. But the more scams and the more unsustainable projects that thrive, they just cause more problems than are actually healthy for the ecosystem. All right. So let's talk about like Bitcoin versus crypto. I think this is an important point to make. Bitcoin is in a class of its own, right? It is digital gold. It is its own asset class that really kicked off this whole crypto thing. And I think a mistake that a lot of newbies make coming into the space is they think that, okay, I missed the boat on Bitcoin. I have to go chase some other shitcoin, some other crypto, some other NFT, some other JPEG, some other thing to get rich quick, right? Those are the people that typically get slaughtered. The next Bitcoin market cycle, I think, is going to be driven by funds, big institutional funds, right? Multi-billion-dollar hedge funds, institutions, sovereign funds, and governments, right? We're already starting to see countries starting to adopt Bitcoin as legal tender. And I think there's even more governments behind the scenes buying Bitcoin. 99% of quote unquote crypto projects are going to zero over time, right? When you look at the leaderboard today, and you look at what the leaderboard was 5 years ago, it is dramatically different, right? There's a thing called survivorship bias. And when you're looking at projects that are alive today, you're not seeing or experiencing the losses that came from the prior crypto projects that failed and caused a lot of people to lose money. So keep that in mind, right? 99% of crypto projects are going to fucking zero over time. Will Bitcoin go to zero over time? I don't think it will. I think, again, it's in a class of its own. New crypto projects will have bull cycles, right? So here's the thing. As there continues to be innovation, there's going to be new projects that pop up. Some of them will have bull cycles, even though maybe a few years down the road, they will die. So you can still build wealth with crypto. You can still trade crypto. You can still get in early and sell into the hype cycles. But again, I think it's just smart to approach this whole game with the mindset that most of these projects will fail over time. Okay. So let's talk about, finally, this is what you guys all want to hear. What's Bitcoin going to do, right? What's crypto? What are the prices going to do? And, it's funny, anytime prices sell off by a large amount, I just get flooded with text messages. Are you buying here? Is this the low? Blah, 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 right? Here's how I think about it. And here's how I'm positioning and thinking about future possibilities. Number one is where we are right now. We are currently testing the 2017 all-time high, right? Let's take a look at Bitcoin's price, and you'll notice that 2017 high was around 20 grand, right? Look where we are. We're at 20 grand. We also are at the 200 period moving average on the weekly chart. So again, every candle here represents 1 week. And as of right now, this week is touching the 200 period moving average. Also, we are currently 70% off of all-time highs, right? With that said, that is the first opportunity for a big bounce, right? This is a major confluence area of support. This is an area where Bitcoin could bounce from, but again, it doesn't have to. So let's look at possibility number 2. Well, when was this? October 2020, I actually did a video talking about the best time to buy Bitcoin. And to kind of recap that for you, historically, the best time to buy Bitcoin has been when it's 85% off of the all-time highs, right? That happened in 2017. It also happened in 2013 going into 2015, right? There was also, even in the earlier days, again, Bitcoin was much, much smaller back here, but it had an 80% crash in just a couple of days. So as the economy gets larger, these market cycles take longer to play out. But that is kind of the second possibility, is we do what Bitcoin has done before, right? We have several examples of when this worked. There's a deeper 85% pullback, and then we get an extended accumulation range where prices stay low and flat for several months, and then you rebound prior to the next halving, right? So the halving, for anybody that doesn't know, is every 4 years, the new supply of Bitcoin gets cut in half. That's going to happen about the early part of May 2024. So in a little bit less than 2 years, we're going to have the next halving. And if Bitcoin does what it's done before, which again, there's no guarantee that this has to happen, but this is, in my opinion, the most likely thing, just because we have data to back it up. If we hit a new all-time high prior to that halving, we could be looking at, Q1 2024 or even the second half of 2023 for a new all-time high. Now, the third possibility is that we never get demand from large institutions and governments, and Bitcoin goes into the long kiss of death, right? Where price just kind of flatlines and then just sells off forever. I really don't think that's the highest probability situation, but we don't want to ignore that as a possibility, right? Something could happen that causes governments and large institutions to stop buying. And if that happens, I don't think retail investors have enough ammo to drive Bitcoin's price to 100K or higher. That's my opinion. You might agree or disagree, but what I would encourage you to do is look at these possibilities and say, how could I trade or invest in a way that would leave me with no regrets, no matter which one of these actually played out, right? When you do that, you remove the guessing, you remove the emotion, you remove the subjectivity. And I want to move on to the final thing, which is, what do you do based on where you are in the markets? And again, this isn't personalized financial advice. I don't know your situation, but I think most people are going to fit into one of 4 categories. And I actually sent this survey just a few hours ago. I said, we all view Bitcoin and crypto through a unique lens. Which lens best describes how you view the space? And the first option was a Bitcoin hodler, right? Bitcoin maxis, Bitcoin hodlers, people that just stack sats, right? That there's a whole subsection of the crypto community that does that. The second is a multi-coin investor, right? They put on the investor hat and they say, I'm investing, buying and holding multiple coins, multiple projects. The third option is an agnostic trader, basically somebody who doesn't buy into the religion of any specific coin. They don't really care what project is what. They just look at it as a chart as a chart, and they are traders. They're in and out for profit. And then the fourth option is an altcoin cult member, right? These are the people that are drinking the Kool-Aid of the charismatic leader, or people that are out there shilling their bags, people that are calling themselves some cute name that identifies them with some shitcoin, right? That's really the fourth option. Okay. So I'm not here to tell you what's right or wrong. I'll tell you which camp I'm in and what I think the right play could be potentially for you, no matter which one of these you're in. So if you are a cult follower, if you identify with a specific project and you find that 90% of your tweets or messages or conversations are around a single high-risk project, you might as well donate your money to charity, because you're going to lose it all. Yeah, I said it. If you are a cult follower for a high-risk project and you put most of your capital into a single project, just pack it up. You're going to do yourself more harm in this space than just leaving and donating your money to charity. Look at the people. And again, over my past couple of videos that I did, look at the amount of people that lost everything with Luna, everything with UST, everything with some of these high risk altcoins that are down today, 95% or more. That breaks rule number 1, which is not doing anything that takes you permanently out of the game, right? So if you're a cult follower, quit watching my videos, donate your money to charity, and go do something productive, create income for yourself. The second thing if you are a hodler, right? If you're like a Bitcoin hodler and you're like, I don't want to trade, I don't want to make tactical decisions, then you could do a couple of things. You could dollar cost average, you could buy as prices come back down, which if you believe in Bitcoin and the narrative and what's happening globally with the big macro picture with inflation and money printing and all of that, we all know that narrative, right? If you are in that camp, dollar cost average, you should be excited as hell that prices are 70% off, right? You could buy some now. And this is what I say, like, I get tons of calls and emails and messages from friends, family, and acquaintances that are like, Chris, what should I do? Should I buy? And my message is always the same. Number one, I'm not your financial advisor, so I'm not going to tell you what to do. With that said, here's my general statement though. If you are interested in Bitcoin and you want to hodl some, buy an amount now that you wouldn't panic sell if prices fell by another 90%, and you would still have dry powder or ammo, more capital basically, for lower prices, right? That you would be excited to buy if prices fell even more. A mistake that hodlers make is they buy at some random price, they go all in, they stack their chips, they put it all on black or red, they spin the dice, prices fall by 50%. They can't take the pain. They freak out. They sell the low. It sounds almost too simple and stupid to happen. But guys, I swear to you, I have talked to thousands of people over the past 10 years that have done exactly that. People that are on Twitter going, I'm a hodler. You're a weak paper hands pussy, right? And they're the ones that sell during the bear markets because they put on their hodler hat and they didn't think about cost basis or their average price. They didn't have extra ammo to buy during the bear markets, and they're the ones capitulating. And they're the ones that are most vocal on social media about not selling, right? Seen it so much. Okay, the third category, if you are a multi-coin investor, right? If you're somebody who has over the past year or two or more invested, you put on an investor hat in a bunch of coins and you did the shotgun approach where you're like, what are the top, all these YouTubers that are like, here are the top 10 cryptos that you're going to get rich with over the next year, right? If you fell into that and you fell into newsletters and, just looking for people to tell you what to buy and hold as an investor, realize that if you're in a deep drawdown right now, you have a couple of options. You can either cut your losses now and start from fresh and preserve the capital that you have left, or you can become a bag holder and hope that some of these come back, which a few might. But I can tell you the majority, again, are going to die over time. And you can experience the long kiss of death with many of these projects, right? So this is the challenge when you buy something and you don't think about risk management. You might be at break even right now. You may have bought the top and now you're down 50 to 95%. At that point, you have a decision to make, right? It's either you take what capital you have left off the table and you put it into something productive, or you hold and hope that it comes back. This is why I approach things from a trader mindset, which is the fourth option. When you're agnostic, when you're not emotional, when you're not religious about this, you can basically stick to trade setups that work in the current phase of the market cycle, right? So if we're in a bull trend or a bear trend or in an accumulation range, you have different trade setups that are appropriate for that phase of the cycle. And then you focus on what you think are higher probability setups with good risk to reward ratios, and you manage those trades, right? You don't allow yourself to become a bag holder with huge position sizes that are down 70, 80, 90%, right? Again, I'm not here to tell you what to do. There's a lot of people that love being a cult follower. There's a lot of people that love just dollar cost averaging and hodling. There's people that love the shotgun approach and they'll watch these YouTubers telling them which is the next 1000X coin. And then there's people that want to approach it tactically as a disciplined trader. There's no right or wrong answer. It's just pros and cons, right, for each one. And if you can't tell, I'm obviously in the latter category here. But I think that's really what you need to consider today is how do you want to go moving forward? Like, do you want to be disciplined? Do you want to be a shotgun investor? Do you want to be a hodler? And then when we look at the price action, really run these scenarios in your mind. Okay, what would I want to do if prices bounced from the prior all-time high and this 200 period moving average? What would I want to do if we do the typical 85% pullback, which would get us to the prior accumulation range, right? What would I want to do in that case? Or what would I want to do if we had just a long kiss of death here and most crypto projects didn't come back, right? If you think through all those scenarios and you think of how you could manage your capital and have no regrets no matter which one played out, I think that's a way that you could set yourself up to survive and then hopefully thrive in the next market cycle, whatever that may look like. So, whew, man, this was a long one. Thanks for hanging out with me. If you guys got value from this, like it up, share it with a friend. If you have a question around any of this stuff, feel free to leave me a comment below, and I will see you in the next video. Take care, guys.